Good morning, students. Welcome to Sai CA Coaching Center, and this is CA M.S.Swaminathan with you. Students, in furtherance to what we have learned till now, let us move on with the next part of the syllabus in today's session. Now, moving on from there, we move to customer relationship management on page 35, which has a concept about analysis of customers and their behavior. Why? Only when we analyze the behavior of our customers would we know what are all those products which the customer intends to purchase, has purchased one in the past, probably has been constantly or frequently visiting to purchase in the past, but has not actually transacted to purchase. So that could offer you some potential to be able to convince the customer to buy and sell, to sell those products to the customer. Maybe the customer was not happy with certain things or was not able to make up their mind. And therefore, if you are able to know that the customer has been visiting in the website certain particular pages of your website, but has not been able to purchase that product, you may want to approach the customer asking them, would they want to buy something like this? And if they're convinced, they could probably buy that, which could give you a higher market share, expand your product related sales as well. Customer account profitability is the next concept, which is a very simple concept. From an organizational perspective, we are interested in trying to understand how much of profit each customer generates for you. Now, why would this analysis be required? It's very important for us to understand, because just take a case of a medical example. If a person, for example, contracts high sugar and therefore is extremely diabetic, and it starts causing serious health problems and spreads to the leg, a stage comes when probably the medical field advises the patient that the leg will have to be amputated. The left leg probably has to be amputated up to the knee, failing which it could spread and probably cause the death of the patient itself. Now, would you think that a patient would tell, no, well, please don't take my leg? Logically, the patient would ask, why have you not already done it? As quick as possible, get it done. Now, when the person has contracted diabetes and which is affecting the leg, does the medical field advise the patient's family that, well, let's probably amputate the heart? Well, heart, we don't use the term amputate. I'm just, for namesake, using the terminology. Would the medical field advise, let us remove the heart? The patient's family would be wild. They would be fuming with anger. Why are you saying so? So we find there are some parts of the body which are problematic. There are some parts of the body which are functioning absolutely normally. Why would you want to tamper with something which is functioning normally, which is healthy? Now, if that is the logic which hits your mind, how is it going to be different in a business world? There comes this concept of customer account profitability. If you have 100 customers and you find that 10 of them are rogues, would you want to continue your relationship with them? You want to immediately sever your relationship with them. You want to discontinue, get away from there. You might also have some customers who are not yielding good returns to you. They consume a lot of your time. You analyze and find out. If you don't analyze, you will never know this. You might be investing a lot of time with the customer, which will cost you a lot of money from a strategic cost management perspective. The returns would be grossly inadequate and therefore will actually cause your profits to drop. Why would you want to have such customers with you? You would want to offload them and concentrate only on the premium customers, or probably if the ordinary customers or subordinary customers offer some potential to be converted into a higher category customer, then you would certainly want to convert them so that both of us gain in the process. This is what basically is addressed through the customer account profitability, which has 5 steps, which you could read by yourself. And one classic industry where you find this kind of customer account profitability analysis is your banking industry to airline industry, where you offer very cozy comforts to the top-notch customers. Now, the next concept that we look at, which is in your page 37, is a customer's lifetime value. Now that you all are in CA final, obviously implying that you've cleared your intermediate, I safely assume that you all are champions in calculating present value of cash flows. You all know what is present value, which means if I'm supposed to be paid by someone 10,000 rupees after 3 years, but I tell the person I can't wait for 3 years, please pay it to me now itself. That person is not going to pay me 10,000 rupees today, would pay me something far lesser than 10,000 by using the current market interest rate for discounting purposes. So probably if 10% is the current rate of interest for 3 years, then the party would pay me an amount which would be equal to 10,000 rupees divided by 1 plus 10%, which is 0.1, the whole power 3, and that is what would be paid to me today as the present value. Now, customer's lifetime value. Why are we talking about this present value concept here? Because we are referring to the lifetime perspective. So what happens here fundamentally is, you being the entity, you are trying to analyze a situation. Is it worthwhile for me to spend some money and invest it on my customer? So let us assume that I am investing on a particular customer 10,000 rupees today, which implies that there is a cash outflow on my side today. Okay? And I would certainly want to go ahead with this proposition only if the benefits that I will derive out of this would be at least nil or positive. The benefits, at least nil meaning what? Sorry. The benefits must be at least equal to this cost or must be higher than that. Which means the net present value must at least be equated to 0 or must be positive, as what we have learned in our capital budgeting, in our intermediate syllabus. So I must know, by investing 10,000 rupees on a particular customer X today, what would be the potential that customer X will offer to me in terms of a revenue that I can earn from that customer in the future. So let's assume that by investing 10,000 rupees today, if that customer is likely to make a purchase of 3,000 rupees from me next year, 6,000 rupees year 2, and 23,000 rupees year 3, then I would like to try to compare to arrive at a conclusion. Now when I compare, obviously we can't compare with the numbers that I gave you as cash inflows, 3,000 hopefully, plus a 6,000, plus a 23,000, which could mean 32,000 totally, compared to a 10,000 spent today. So we can't say that we are earning extra 22,000. Why? This is like comparing apples with oranges. On one hand, you have a future value, which is next year's receipt, year 2 receipt, and year 3 receipt, and 10,000 rupees being spent is current year's or present value. So we have to convert the future value into present value by discounting. So first step, we need to be able to calculate or estimate the expected cash flows into the future. Future meaning how long? Would it be only for 3 years or 4 years or 5 years? Is there any probability given over there in terms of the cash flow possibility? So we have to factor those things, arrive at the expected future cash inflows, discount them appropriately with the rate of interest given, arrive at the present value of the cash inflows, compare it with the present value of the cash outflow, and look at the net present value. If it is positive, it means we can certainly go ahead with the proposal. Well, the customer's lifetime value concept is extremely similar, or rather exactly the same as what we do in our net present value basis of calculations in investment decisions or capital budgeting chapter of a financial management in CA intermediate syllabus, which you've already done. Now moving on from there, we have to touch the concept of few components are relating to this relationship management on page 39: customer selection, acquisition, retention, and extension. Obviously, as a business person, we should select who are the customers we would want to have a relationship with. When you finished your 10th standard, did you not select commerce as your course? Why didn't you select science? When you finished 12th, why did you not actually go for just a BCom in a college? You chose CA. Why did you not choose an MBA in probably Tom, Dick and Harry University? You chose CA for some reason. There is some logic behind. Similarly, businesses also will have to select their customers and establish that appropriate relationship. Once they select with whom we want to do the business, they will have to try and acquire them. There is no point in you saying, I have selected chartered accountancy as the course that I will pursue in my life without that acquisition phase, meaning you basically don't try to actually get into the course to study. The study material will never come to you. You need to go to the study material, correct? So you have to develop that kind of a relationship with each new chapter, each new subject. And once you do, don't you revise to retain. The same thing happens here. Would you want your customers to leave you? No, you want to retain. You want only those customers to leave you who are problematic. When you read your syllabus, there is some part which is extremely difficult and it causes irritation in your mind. Probably at the last minute, close to your exam, you say, I want this to be out of my mind. I won't even look at it. Why? It may cause more of a problem for me. But I hope sincerely that you will not apply that philosophy to 100% of the syllabus and say everything causes a huge problem for me and therefore I will go to the examination without studying itself. So you need to ensure that the retention is also there. And then once you gain conceptual clarity in a particular concept, don't you go and read and enlarge, enhance your knowledge? Similarly, even in a business, we try to extend, meaning maybe we try to get more customers, or probably even with the existing customer. What we try to do is we try to resell, make increased sales, or probably cross sell. Complementary product could also be sold to them. For example, a customer who comes and buys a pen from you, you could also try to sell ink separately to the person, probably, or maybe stationery items, or probably a pen holder or whatever be it. You can also try to upsell, meaning you can try to educate the customer that look, you can move on to the next stage. Upselling is something like once you finish your intermediate in CA, if the institute recognizes that and sends a communication to you at your home, now you are promoted to CA Foundation. How happy are you? Is this not the best course to be pursued in life? You expect that you should be promoted to the final level. That's exactly what is upselling. You want a customer who travels with you by economy class or second class in train. You try to convince the customer to say, well, now your financial position has improved. Why are you still continuing to travel by ordinary class? Why don't you come to AC 3 tier? That helps you generate more money for you, also makes the customer feel a little more happy. A customer who is used to traveling by AC 3 tier, you try to convince the customer to travel by probably AC 2 tier and then even AC 1 tier. But please wear a helmet and try to convince the customer for AC 1 tier. Don't ask me the reason. Please ensure you wear a helmet and then try to convince the customer. So upselling also has certain limits in real life scenarios. Now, we are through till almost page maybe 40 or so. Okay, there we find that we are into service level agreements and probably a small part remains. Now, to continue further, on page 40 we find a concept, brand strategy, the top part. Now let's move away from the study material and try to look at another example to understand what is all about this brand. In fact, before I take up the example, let's just read probably a part of the 40th page under brand strategy. The first sentence, especially branding of product makes a huge difference in its appeal to customers. Be very careful. Branding can be usage of logo or specific color or any other means which makes the product or service distinctively visible among others. Please notice one thing, that it is not essential that the product must indeed satisfy those requirements. It is only something which makes a huge difference in its appeal to the customer. It must look attractive. It must create an impression in the minds of the consumer. This is all that is involved in brand building, a brand strategy. Now, let's take a step away. While you may read the study material on, let me just give you an example to understand the brand concept a little more. Now, I would like to take an example. Let us take four students. I'm just giving names, hypothetical names, okay? It's not that it's you, hypothetical names. One, for example, is I would like to assume one is Shweta. I'm going to take the example of only girls. The boys, basically, with regard to the example, would actually fit into this example in a very ideal manner. Therefore, I'm leaving them out. Second, I would like to assume is Ramya. Third is Shruti. And let's say fourth one, let's give a name, Shivashankari. Okay. Now, let us assume that all the four of them, namely Shweta, Ramya, Shruti, and Shivashankari, are given a task to be performed. Now, they have to take with them someone to the pond to be bathed. Okay. And that person is nothing but a buffalo. Okay. So Shweta walks with a buffalo, and the buffalo has on its forehead a label stuck as Buffalo 1. Similarly, Ramya's accompaniment would have the label Buffalo 2. Shruti will have on her buffalo, Buffalo 3. Shivashankari has on her buffalo a very nice label which reads out as Buffalo 4. Now, all of them simultaneously walk across to the same pond with their accompaniments. Now, there is a video recording of this event that is happening. Everyone is witnessing this. Now, as they are in the pond, the event holder gives Shweta Lux soap, to Ramya a Liril soap, to Shruti a Dove soap, and to Shivashankari, let's assume a Hammam soap, with which the buffalo will have to be bathed. Now, the bathing process takes about, let's say, half an hour. You have individually, each student in our example has individually bathed the respective buffaloes. And let's assume that they've all been garlanded and everything has been done. Now it's time for the photo session or the video recording session, which is the key point. Before the video or where the recording session happens, question is being asked to Shweta. For example, will Buffalo 1, which has been bathed with Lux soap, look extra beautiful compared to the other 3 buffaloes? Because Lux is generally aligned with beauty. This is what we have been shown in the ads over the last 3 to 4 decades. I don't think. I think the buffalo will continue to remain the same old buffalo only. It's not going to look any extra beautiful. Okay. Let's take Ramya's case. Now, Ramya's buffalo was bathed with Liril. The ads that have been telecast over the last 3 to 4 decades always seems to be giving this impression that a person who bathes with Liril will feel extra fresh, extra lively. Now, will Ramya's buffalo start jumping and acting in such a manner, behaving in such a manner that it is the most active buffalo in the world? Its face looks extremely fresh. No, it will look to be the same old buffalo only. Shruti's buffalo is the one which is bathed with Dove. Now, Dove has been presented to us in the TV as though something which, if one were to apply, the skin tends to become soft. Now, I hope each one of us would probably have touched a buffalo in our lives. If not, at least would have known from our parents how soft is the skin of a buffalo. Do you think the buffalo which is bathed by Shruti with Dove is going to have a softer skin compared to the other 3 buffaloes? Certainly not. And coming to our last example, I guess it was Shivashankari probably. In that case, we see she has bathed her buffalo with Hammam soap. So can we say, or can she claim that it is only her buffalo which will be completely or more germ-free compared to the other 3 buffaloes? I don't think so. No will be the answer in all the cases. This is all about brand building. An image has been created in the minds of the consumers, prospective consumers, that, well, if you, for example, use Lux, you're going to look extra beautiful. If you apply Liril, you will feel extra fresh. Try it when you feel sleepy. I don't think there is any difference. Try drinking a boost. Do you feel that this is the secret of your energy? I don't think so. You drink Complan. Do you feel any difference between Complan, Horlicks, Boost? Except the taste. But some funda is given in the market and they try to sell it to you saying if you drink Complan, you are going to grow extra tall and you will be the tallest person in the world. This is the reason why I read that statement for you about brand strategy in page 40. Coming back to that sentence, especially branding of product makes a huge difference in its appeal to customers. Branding can be usage of logo or specific color or any other means which makes the product or service distinctly visible among others. I hope the concept of branding has been instilled in your minds. So we have to bear that in mind as part of a strategic cost management perspective. Now, I'm not trying to tell you, therefore, don't invest money in branding. I'm only telling you one thing. Look at all these soap manufacturers. By creating this brand image in the market, that Lux creates that beauty, they have made literally a fool of us. Many of us go for Lux. So, for them to give the TV ad, they have to spend a lot of money, and some actor or actress is being asked to endorse, who will be paid huge money. That cost has to be factored as part of strategic cost management and performance evaluation. So there must be a benefit that should come out of it, substantially more. For that benefit is what you do the branding and create that image. Okay, I hope it's clear to you. Then we move on further from there to service level agreements. Okay, service level agreements basically will be something like, you see, we have this chain between the original supplier of raw material and the end customer. We have understood through value chain analysis, through supply chain management, that there are several linkages in this entire spectrum of activity. Now, even if one chain were to get interrupted or snapped, would it not affect the delivery of the final product to the customer? Yes. Therefore, if this entire chain from the original supply of raw material till the end point to the customer is being managed completely by you in your own factory, still, please do not be under the impression that because you have no external dependency at all, does not mean you will definitely deliver things to the customer at the right time. Why? Everything cannot be manufactured within your factory by the same department. Different departments will be involved. Therefore, if Department 1 fails to supply it on a timely basis to Department 2, that will have a ripple effect in terms of the supply to Department 3, Department 4, and to the final customer. So even if a process is being managed internally and not externally, we still need an agreement between Department 1, Department 2, Department 2 to Department 3, and so on and so forth, in terms of what is your timeline, your deadline to deliver the product to me. What are all those things I expect from you? By when do I expect from you? And what is it that you expect from me? Whether it is an internal service or an external service, it is very critical to have this. And when it is external, there could be legal ramifications as well. If you fail to deliver, you could be dragged to the court, which might not happen when it is internal. Okay, that's a key differentiating factor. And then you move on to the benefits of supply chain management, which is quite self-explanatory. Obviously, supply chain management, if properly done, will help us render or provide a very high level of customer satisfaction, which will help us remain in our business and grow further as well. Okay. And then finally on to page 44, we touch a concept which is gain sharing arrangement. Now, rather than going into the textbook or the study material, take an example. What is all about this gain sharing arrangement? You might have heard of in Kollywood, which is Tamil cinema industry, that I don't know whether it is true. From what I've heard, I'm just sharing it with you. So if it is wrong, please excuse me. And if it is right, apply it in this gain sharing agreements or arrangements. I've heard something like this, that actor Rajinikanth probably does not take much of a payment in terms of an acting fee. He would say that, well, give me the distribution rights. Why does he say so? If, for example, instead of Rajinikanth, suppose, let's say the producer says, I don't want Rajinikanth in this movie, I want Swaminathan as the actor. And if I were to act there, do you think you all will go to the theater to watch if I am the hero? definitely the output would be only a 0. Why? I don't have the personality, I don't have any such charisma which probably Rajinikanth has earned over a period of time. Now, it is because of that that Rajini says he is able to play on the minds of the masses, and therefore he feels rather than taking a 25 crore payment, I can make more money by getting the distribution rights because my movie will definitely be a super hit, whatever be the underlying story. So he says, if the more and more the box office generates, the movie generates, if it generates probably 200 crores, 300 crores, 500 crores, he gets a share. So gain sharing arrangements are figured or planned in such a manner, devised in such a manner that the person, the supplier earns more and more when the product will be something which will definitely satisfy the customer requirements. So Rajini says, well, I don't want a fee itself. One might tend to think, well, there's a huge risk. What happens if it is a flop? If the movie turns out to be a flop. Of course, if it turns out to be a flop, Rajini suffers. But the gamble itself is that movie will not be a flop because of his charisma in the market, which is how the products also impact the customer minds. That's your gain sharing arrangements. And then you have a small concept which is your outsourcing, which we all have known. Our own real life friends, colleagues are working in outsourced entities, BPOs, from London, from America, from Australia or something, because it is cheaper to get things done over here. No one will outsource stuff in the service sector, maybe to India, if the quality of output is going to be compromised. It is being outsourced only because the quality is kept at the same level or probably even is higher. The cost drops significantly and therefore impacts our strategic cost management. With that, I think I can safely announce that chapter 2 comes to a closure. Best of luck and come back to me with doubts if any.